Hey, Lauren here. We're doing Home Buying 101 and we're chatting about private mortgage insurance or PMI. And so when and why on earth you need it. So there are a lot of loan options right now. Any loan that is less than 80 to 20 or any loan that has less than 20% down, which is kind of the conventional wisdom, I should say. Probably change my words there, but if you put down less than 20% equity in a home, which is basically the cash that you use to buy a home. Let's say you were buying a $100,000 home. You need to put 20% down, so you need $20,000 to put down, and then you get to avoid something called PMI or private mortgage insurance. And why this matters to you is because if you're getting an FHA loan, which is typically it's a government-backed loan that has low down payments, or any type of loan that requires less than 20% down, you're required to get something called private mortgage insurance. And why it matters is, one, it's a pretty hefty fee, and two, you need to know when you can get rid of it. So PMI is assessed when you have less than 20% or 80-20, less than 20% home to value, which we've talked about the loan to value. It's just you need more equity in the home. And if you have less, the PMI does equal about, I would say, a light car payment. So it can add a couple $100s to your home payment depending on what your home value. And so it's a significant cost. And it's definitely, when you see the line item, you're like, what is this PMI? And get rid of it. Like, this doesn't help me. But that is what is required when there's less than 20% down on a house, which is okay. But when you have it, I also try to get rid of it as soon as I can when I buy houses. And then one way to also get rid of the PMI is with appreciation. So if you've had the home for a while, but it's not like you don't have enough payments to pay 20% down of the original price, sometimes it's worth it to get an appraisal. And sometimes you can ask the bank, whoever owns your mortgage, to do an appraisal to check the loan to value ratio. And if it happens to have appreciated enough, sometimes you can get out of that PMI, which is amazing because then you get money back in your pocket and you're no longer having to spend it. So those are a couple tips, or that's what PMI is, private mortgage insurance, when you have less than 20% equity in your home. And then there's the tip of getting an appraisal, especially now because it's a hot seller's market. So everything's really high right now. So if you're paying PMI and you bought your home, a year or two ago, and you think, hey, maybe my house is appreciated enough, now is the time to go ask your bank for an appraisal and to go check on that loan to value, because you might get out of that PMI and you might get hundreds of dollars back in your pocket every month, and maybe you can make extra equity payments or whatever you want to do with it. So thank you guys for tuning in. If you ever have any questions, my door is always open.